Ever dreamed of waking up to a world where money works for you, turning your aspirations into tangible financial realities? Picture a life where the sweet sound of dividends hitting your account replaces the clink of coins in your pocket. And hey, if you're new here or you've been with us for a while now, welcome back to Passive Income, where we turn dreams into streams of income. Now, to start things off, if you're eyeing a quick path to living off dividends, covered call ETFs might just be the golden ticket. These funds not only ride the wave of stock appreciation, but also dish out dividends, creating a sweet dual income source that's often overlooked. How does it work? Covered call ETFs invest in stocks while writing call options on those very stocks, generating extra income. Picture this. When call options are sold, premiums received turn into dividends, and if the stock price rises, capital gains add to the pot. It's a two-for-one deal that provides a stable and reliable stream of passive income. Take a look at Zwild, OilK, and EWZ, each boasting a 12-month trailing yield around 11.8%. These ETFs offer a double-digit yield, significantly higher than many traditional dividend stocks. Now, while covered call ETFs offer a unique blend of income, another intriguing strategy involves diving into the world of high-yield REITs. These real estate investment trusts function like teams investing in various properties, and they might just hold the key to unlocking your dreams of living off dividends. So, how do they operate? REITs rake in money by owning and managing real estate properties, sharing the profits with investors. Imagine being part of a team that earns from malls, offices, and apartments. However, keep in mind that the returns aren't without risks. They're tied to property rentals and economic conditions. Consider Two Harbors Investment Corp., Brandywine Realty Trust, and Orchid Island Capital Inc. SOWRs, boasting dividend yields of around 20, 3%, 19, 9%, and 4%, respectively. Historically, REITs have shown a solid average annual return of 10.8% over the past 20 years, making them a smart option for potential wealth growth and steady income. Now, if you're finding these strategies exciting and valuable, make sure to hit that subscribe button and ring the notification bell. You don't want to miss out on future insights and strategies for turning your passion into online income. Now, as we navigate through diverse strategies, the spotlight shifts to dividend aristocrats, a group of stocks with a track record of consistently increasing dividends. Picture these stocks as the dependable players in the market, consistently raising the bar for dividend payouts. Let's uncover why joining this elite group could be a strategic move for your financial goals. What makes them stand out? Dividend aristocrats belong to companies in the S&P 500 index that have increased their dividend payments for at least 25 consecutive years. These aren't flashy newcomers, they're seasoned players known for their stability and resilience, even during challenging economic times. Consider giants like 3M, Leggett & Platt, and Walgreens Boots Alliance, offering a consistent 7% dividend yield. While it might seem lower than some other strategies, the reliability of these dividends makes them an attractive choice. These companies are well established, less likely to be acquired, and have a history of performing well in diverse economic conditions. In conclusion, dividend aristocrats offer a conservative yet reliable approach to earning income from investments. Their consistent dividend increases, along with their presence in the S&P 500 index, add credibility to their performance. Now let's tie it all together and discuss how these strategies align with your unique financial goals. So, whether you're inclined towards the stability of dividend aristocrats, the dual income potential of covered call ETFs, or the real estate ventures with high-yield REITs, the key is finding the strategy that aligns with your dreams. Each path offers a unique approach to turning your investments into a reliable source of passive income, bringing you closer to the financial freedom you desire. Now it's your turn to weigh the options and envision the financial future you desire. Which strategy resonates with you? Leave your thoughts in the comments below. So, if you found this video informative, please hit the like button and subscribe for more financial insights to join us in revealing the secrets behind fortune. Only here on Passive Income, where we turn dreams into streams of income.